All right, what's up? So I want to go through and we're going to talk more price action. We're going to talk more about where the price is being controlled and how you can trade off of that. Because within this range here, there were several opportunities where you could have gotten a solid 100, 200 pip trade if you were just paying attention to some really basic concepts. So whether or not you watched the last two videos, this area right here I deemed as something really important. And let me explain why. So first off, I'm taking this blue candle and how this blue candle came in almost, very close to, overtook this bearish candle, right? And the reason I took that one was because we have this significant bearish trend. And then all of a sudden, this is the first candle that came up against that. And then instead of having something break that, having something lower than that, we had this imbalance level right here. Look, okay? So we had the next level that formed being something of a higher low, right? Really basic, really simple. From points like this, and again, if you were going to enter, I would recommend doing it on a lower time frame, like the 15-minute or the hourly, because here, like, let's say you actually pegged this spot, but you're still going to end up with a fairly large stop loss, right? Even if you got it up in there, still 60, 70 pips. I mean, depends on how you trade. But if you want to keep it within 20 or 30 pips, you could notice this spot taking off and then find something within there. But I'm not going to work with that right now. That's not what I'm trying to focus on. Okay, so again, this is the point where institutions are buying back shares that they were selling from these higher levels. That is the reason that the market is moving right here. It's getting pushed back up into these higher levels. Why these higher levels? Because retail traders, especially when a trend is very well established, retail traders get into FOMO, right? They don't want to miss out. They want to chase after the price action. So this is not how we're going to trade. I want to be clear about that. This is not how we trade, obviously. But a retail trader would say, oh, I'm trying to short this right now. Their stop loss would be here. Their stop loss would be here above these previous levels, right? Hold on. My highlighter tool. So say this level. So say this level. So say maybe even somewhere up in here. These are the last previous significant highs, right? The quote unquote safe places if you're going to short something right here, which means if a retail trader is selling right here, their stop loss order equals a forced buy. In other words, if an institution is buying at these low levels and they want to sell off their shares again, which is what's happening at these higher levels, a sell-off, a sell-off, a sell-off, who is buying the shares from them? Well, it's the retail traders who all put their stop losses right here. So this is just a swift move of how institutions are buying back their shares at these lower levels, and then they are selling them back to retail traders up here while the retail traders buy their shorts at a higher price. I hope that makes sense. But this is how the whole profit loss thing works in the market, right? You buy high and sell low, or you sell low, or I'm sorry, you sell low, sell high, buy low, or you buy low, sell high. It is one of those, whereas the retail traders tend to do the opposite. They tend to do the opposite of that, and that is what keeps them in this state of always being on the wrong side of the market. So with that, let's get to where the market is more currently. Last week, we were right in here. Again, doesn't matter if you watched the last video or not, but I was anticipating actually that we were going to press up into this level one more time before dumping. So we didn't, because look at this. We were right in here, and this was where the next imbalance was. Right? Look at that. It's small, but do you see those two levels? So we had here down to here, and that was enough to press price down into here, and then the imbalance on the bottom we have right here. Okay? And now you don't need to know these crazy technical concepts or whatever to actually understand just these little subtleties and how you can pick a really good trade. Um, Essentially, what you're looking for is when price is on the edge, right? When price is on the edge of whether it's on the top or the bottom. See, this is a secondary zone. I just want to illustrate this point. Okay, so this is the edge. This is the highs, the significant highs that have been made. And we're pressing back down. We're closing below this right here. We have this wick, and then we have again like a lower high right here. The candles are closing a little bit higher, which is, not perfect. It's not ideal, but still with the way price is going lower, and especially how this candle closed and it engulfed this previous bullish candle, that indicates an excellent place to sell the price. Sell, right? Because we're pushing against these highs, so this is a good place to sell off your shares. Then we have this imbalance down to the next point. Again, you don't even need to understand what this technically means. Just look. Price is closing and it is holding at a lower level than it was previously. It's really simple. Then you have even the next one after that. Well, I'm trying to get rid of this, which is even more significant. Significant push down here. Because again, like this area right here, this gave us a similar thing where the candles closed a little bit higher, but look at the candle that closed afterward and how it engulfed these previous two, and even like this previous bearish candle right here. That is insinuating that volume is heavier than it is light, right? We're getting to this point where institutions are wanting to sell their shares. They're still at a high here, okay? So when you're at the edge of price action, a lot of people find it to be like risky trading if you don't wait for the retest, whatever it is in the retail world. But like, let's say you find this edge right here. I personally think this is one of the safest ways to actually find an entry because you're going to have the least amount of risk in doing so. So, right, you have essentially trend bound, lower lows, lower lows, lower lows, and then you have one and wherein, I mean, if you were aggressive enough, you could have spotted that and been like, okay, here's this literally right here, and taking up against price right there, like something like that. Or I mean, if you could have even taken the earlier one. That might not have been as valid, truthfully, just because, right, let's say you accepted that as the floor, but then you had this giant bearish candle. It might have been a little sketchy for a minute. You might not have known if it was like for sure if it was going to stop at that range. But then when we had this right here, and all of a sudden you have this point where price pushes up and it's actually closed the distance, you have a very defined higher low, then that's a point for an entry right there. And again, I would do entries on a lower time frame, but like let's say you got it somewhere in here in these wicks. I have to find where to put the stop loss. Your stop's not going to have to be below here because these candles serve to trap volume already. And I mean, if you were on a lower time frame and like you really honed in on this, which again I'm not going to focus on right now, you get a nice tight stop in there, and you could take this right back to this significant level of volume. So I mean, look at what you have there. You have a 1 to 5 risk to reward trade. And it's really simple, and it's just buying at the edge here. But all you're trying to determine is, all right, where is the edge of price, and where's the first point where I can determine where volume is being trapped, and we're now confirming that the direction is reversing. You take a trade right there. It's really simple. As far as what we're going to do next, again, I'm not trying to make a prediction on this necessarily. I want to wait. We have NFP tomorrow, and it's the end of the week, so I might just give this a rest for the moment. But we have this significant level here, and I'd call this more of a micro zone than anything. But let's say we go back up into here and we test this, and then we test this, and then we go higher. Or let's say there's a lot of volume still right here, and that causes price to retract back down into here. And then let's say it either pings its head off of there and goes lower, or it holds that and it goes higher. We don't know yet. So like I said, give price time to work itself out. Give price time to show you that really clean, easy entry, and you'll be able to really get a higher win rate. You'll be able to be more profitable because you're winning more often and you're taking trades that require you to risk significantly less. All right, so with that, as another price action idea I wanted to share. I hope you all learned something from this video, and happy trading. Peace out. Have a good night or day, wherever you're from. See ya.